Hello and welcome to all the investors, users and subscribers of the GoldenPi community. I'm Abhijit Roy, co-founder and CEO of GoldenPi, your favorite online platform for all fixed income investments. This is the 18th episode of our Industry Speak series. As you would recollect, in the previous episodes, we have invited some very interesting companies from the finance world. We got into deep discussion with their promoters, with their top management to understand about the financials, the operating business model, and the vision of the company. All this to empower you with information so that when there are investment opportunities, you can take an informed decision. In this episode also, we have got a very special company that we are going to learn about. It is an NBFC with a strong social cause. And what is that cause? It is to empower people at the bottom of the pyramid and to empower women. Now, as you understand that this is something which actually is a very large business problem to solve as well, given that we are a population of around 1.4 billion, right? So this is a very large TAM that Midland Microfinance, Midland Microfin Limited is attempting to solve. Ladies and gentlemen, it's my sheer pleasure to have with us Mr. Gopesh Gupta, who is a Deputy Vice President at MML. Gopesh heads the Finance and Accounts vertical at MML. Gopesh, a very warm welcome to this episode.
Thank you, sir. Thank you for inviting me as a representative of Midland Microfinance Limited, and it's been a privilege for me as well to join this communication or this conversation. And I'm here to answer all the things that I can ask and answer. So really thanks for being over this call. Thank you.
So we look forward to a very engaging and interesting discussion with you, and we'll learn all about your company. So let's get started, with the basics. So, Midland Microfin Limited, this has got a bit of a Western flavor in the name, right? So what's in this name, right? How did you land up with this specific name for your entity?
So see, sir, this name or the company is being conceptualized by my promoter, Mr. Amardeep Singh Samra, who is the managing director as well as the chief promoter of this company.
Okay.
So basically, how he conceptualized this name Midland. So basically, he is having certain roots, you can say, with the name called Midland, because in his earlier avatar, or you can say in his previous experiences, some of the companies he has handled, right?
Okay.
He put that name of Midland there, right? So with this new venture, which he started in 2011, so he thought of to continue with the same name. Yeah. So that is the reason that he mentioned the name of Midland. And then Microfin is basically the essence of the business, which is the microfinance business, right? So he combined both the words, and then this name Midland Microfin Limited came into the picture, right, in 2011. So that was the basic idea, you can say, before that name.
Got it. Now let's understand what was the specific problem that the promoters were looking to solve, right? When was the company founded? And a little bit about the background.
So see, sir, the company was founded in 2011 by the promoters, and the basic idea why he started this company. See, Punjab at that time in 2011 was very raw, you can say, territory, where people who were into the microfinance already, they haven't thought of that Punjab would require any sort of microfinance, because there is conception, or you can say general assumption, that Punjab is a very rich state. People do not require any sort of loan, right? But my promoter was basically from Punjab only, and he knew at that time that there is an acute requirement of microfinance, because there are some money lenders who are lending at the rate of 40%, 50% or 100%, right?
So that's outrageous. 50% is like,
yeah.
I mean, it'll bleed the borrower forever.
See, people who are in the depth of this money, because there are like food vendors, small shop and like owners, they require money to expand their businesses, right? And they were almost dependent upon these money lenders only. So my promoter, he met in 2011 with Mr. Professor Muhammad Yunus, who is the father of microfinance.
Right.
He met him in Bangladesh. Then he visited Grameen Foundation there in Bangladesh. Then he visited other MFIs who were at the time of 2010 were operative, like SKS Microfinance, Ujjivan, all these entities. And then he started microfinance in Punjab only, where that idea was just came into the picture after the Andhra crisis. So Andhra crisis was one of the biggest crises in the history of microfinance, where in Andhra Pradesh, state government has stopped microfinance entities to collect the money. But still, my promoter had the true essence in the business, that this business will gonna flourish with the proper rules and regulations. And then in 2013, proper regulations came into the picture, RPI came into the picture, and now you can see that this overall sector has now crossed 4 lakh crore of portfolio size, which is immense.
Well, I think we'll stop here because we will get into those specifics of understanding the overall TAM. I understand that the entity was set up in 2011 by the promoters, and this was inspired from the microfinance concept, which is pioneered by Mr. Muhammad Yunus, who is also a Nobel Prize winner in this field, right? Under the Grameen Bank concept that was established in Bangladesh. Great. Now let's delve a little bit, actually in depth, into your business model, right? So when I was reading the report about MML, or Midland Microfinance Limited, right, I understood that it serves the small income generating individuals' loan requirements by empowering women borrowers. I mean, it's a big statement. Let's break it down into small questions, and let's understand the overall picture for the benefit of our viewers, right? So first, let's understand that what is the nature of this market segment. If you can tell us, who are the typical borrowers? What are this general profile in the economy? What is the kind of, family structure, who would come in and borrow funds from you?
See, sir, now things have been very crystallized. I'll answer one by one. So basically, RBI has given the criteria for selecting any particular borrower who can take loan from the microfinance entity, right? So as per the RBI regulation, a particular household means a family where there is a husband and wife and the unmarried children, they should have the total income less than 3 lakh rupees on a yearly basis.
Got it.
Can take a loan from microfinance entity.
Okay.
And that too, there is a bucket that have been specified that their overall expenditure in terms of loan repayments should not be more than 50% of their monthly income. So if these criteria are being fulfilled, then a particular customer can take the loan from the microfinance entity.
And they have to give a collateral against this?
No, there is no collateral. There is no security against this loan. This is pure a GLG model. So let me tell you. So this whole business is running on the Grameen model, which we call as joint liability group model.
Okay.
Where the center officer, or you can say the field officer of the company, visits a particular branch, or you can say location, or you can say village, where they ask the ladies about the company. They inform about the model. They tell them how they can take the loan, what are the nitty-gritties, what are the, you can say, the procedures that they need to follow, what are the interest rate, all these things. Then they ask them to form a group, which we call as a joint liability group, where there are 5 ladies in the group, and that lady should also not be the relative to each other to form that group. And that selection is also being done by the ladies itself. There is no intervention of the company to form that group, right?
Okay.
And accordingly, after that, their CIBIL is being checked, their current outstanding liabilities, their purpose, then visits are being happening on their houses, and then after all the due diligence, the trainings, the sanctions have been given, right? So generally the whole TAT turnaround time is near about 4 to 5 days. starting from, you can say, onboarding a particular client to disbursement to the particular client. This 5 to 6 days are being taken, and this whole procedure is paperless. So there is no involvement of like filling multiple forms. So what is being done? So basically, all the things are being done on the mobile platform. There is the application. Then signing is also based on Aadhaar e-based signing. So these things are being done now, like with the help of IT, automatically and without any paper involved. So that is the thing we are using.
So I got clear understanding about the market segment that you are targeting, which is basically the villages or people close to above poverty line, but it is progressive poor, as we
progressive poor, yes.
Progressive poor. Now here you are empowering women by putting the capital into their hands, wherein they have to form a group which is called as a JLG, or the joint liability group, which comes in and then applies for the loan for whatever enterprise they're running. I believe these are very small scale enterprise like weaving, knitting, like manufacturing papad and all that.
Yes, right. Papad, like mason work, then beauty parlors or food vending, all these activities. There are around 150 odd activities for which we guys are giving the loans.
Got it. When you're saying this is like a very massive market, right? Actually, to speak, probably this is the largest market. This is the larger Bharat out there, right? So Can you give a bit of an indication of what is this overall market size that you are, looking to capture?
So, see, sir, if you will see, the current market size is near about 4 trillion INR, 4 lakh crore right now. As per the latest surveys that are being done by the different agencies, the overall size of the market is near about 17 lakh crore, right? So right now, only 20% or 25% market is being captured right now, right? So there is a great, you can say, landscape, or you can say opportunities which are there for the microfinance entities to capture, because very recently multiple reports came where this is being clearly mentioned that still there are good money lenders who are giving the money to these customers and charging higher rate of interest, right? So market size is great right now also, and I think this industry is having another 20-25 years to flourish, because great opportunities are coming.
Absolutely. I just did a quick math, 17 lakh crore market size. Essentially, in dollar terms, if we really have to put it, it is close to $200 billion market.
Yeah.
It's a massive, disruption and a massive problem to be actually solved. Understood. Now, I also understand the perspective of, how you're empowering women, but is it like exclusively for women only? The JLG has to be composed of women, no men who are also doing small scale business can take loans from you. Is that it?
See, sir, right now the concept for this company is only for women only, but these women can take the loan for their husbands as well. So it's not like that the beneficiaries should only be the women only, but their husbands can be the beneficiaries as well.
Understood. During this process of overlay of how you reach out to the customers and then how you onboard them, you mentioned one very interesting thing. Within 4 to 5 days, the loan is disbursed to them, and prior to which a CIBIL check happens. And you also mentioned that it is all paperless. Now, I'm just wondering one thing, these are the customers who would have very scanty digital footprint, right? I mean, when we look at any standard NBFC, essentially they say that, we take up all the documents with respect to the Aadhaar, via the account aggregation framework through Sehmati, we get all the bank account details, everything, and we compute from there, right? We also look into the social profile, what kind of industry they are working, take the salary statements, which is understood, because for that kind of clientele, there is a sufficient amount of digital footprint. But for you, isn't it a challenge given that, this state of the economy that we are speaking of wouldn't essentially be having a bank account, or might have, right? But then the track record, history and everything would a lot be offline?
See, sir, if we talk about the bank account penetration, right? Let me be very honest with you on this point. This bank account penetration is 99.99% right now even in the very rural areas as well.
Understood.
Because now every person during these new schemes of Government of India as well, they are getting money into their bank accounts only. So bank account penetration is very, very good, right? One. Second, if you talk about how to evaluate a particular customer, right? See, to evaluate a particular customer also, it's not like that it's purely paperless, right? So it is also being done by visiting their homes, by discussing things with them, and we are not filling on the forms. What we are doing, we are punching all this information directly on the mobile application, right?
Understood.
See, if I'm visiting a particular home, I have seen these items. That means that particular lady is having that minimum things into their home. That means they are above the poverty line. They are doing these sort of activities. The sale level is that much amount, right? So one thing is clear that they might not have entries into their bank accounts, but by seeing their assets, by seeing their items, by seeing their livelihood, or you can say their standard of living, we guys are getting an idea that what would be the income amount for that particular household. So that things are basically being like helpful for the company to understand and evaluate the income source of our customers, or you can say the income amount of our customers.
Understood. So basically, you got to go down to the premises of these, set of 4-5 women who are forming the JLG. You have to do an on-ground examination, which is basically a very good way to actually keep the NPA as low as possible, because you understand the reality, right? And then once you get that data, you are transferring it completely digitally, which you're getting through the mobile application, and then your backend team, once again using technology, is basically doing the entire computation and disbursement. Understood. Now, I think it's also important to understand that in 2011 the company was started, and now as we speak we are in 2024, 13 years over for the company. So I'm sure MML would have achieved quite a few significant milestones across this tenure, right? So if you can give some of those, maybe 2 or 3 such significant milestones that MML has built to being here today.
See, sir, there are good number of milestones that we have achieved, but if you will gonna list 3 or 4, I would say the first milestone that we covered was our first listed non-convertible debentures that we did in 2014. I think we were the first entity that did this particular sort of transaction, where we issued a non-convertible debentures of 25 CR, and that debentures were being listed on the Bombay Stock Exchange. One. If you talk about the second major thing or milestone that happened in the company, was the investment done by the ICICI Bank. So we are the only entity where the second largest private sector bank of India, right, has put an equity investment into the company. So they are our roughly 9.95% shareholding is being there with the ICICI Bank. Then if you talk about the third major thing that happened to the company is the number of customers. Now the total customer base has been crossed by 1 million customers. So now we have more than 10 lakh active customers which are there with the company. So these are the 3 major milestones that have happened in the history of Midland. Other than that, there are multiple achievements that we did in terms of raising funds, in terms of geographical expansion, in terms of technological upgradations. But I think these 3 things should be into the uppermost category.
Got it. Now, I mean, those are significant milestones, no doubt. Issuing of your NCD, transaction over Bombay Stock Exchange, ICICI Bank taking up 9.95% equity stake in the company via cash infusion. And I understand a bank can take up only up to 10% of an entity or 100% of the entity, right? So I understand that perspective. And given that it's ICICI Bank, the second largest private sector entity, right, with a massive amount of due diligence, is definitely a commendable achievement. And then you mentioned this interesting thing, over 10 lakh customers who are actively associated with MML. So, let's just try to understand what would be the geographical spread of these customer base. Are they only in the Punjab and Haryana belt, or they are across the length and breadth of the country? If you can share your
sir, we are basically a Punjab-based entity, but I think now we are more present in Bihar and UP. So Bihar is having 33% of our total portfolio. Roughly, we have almost 3 lakh customers in Bihar itself. Then UP also, we have roughly near about 2.5 lakh customers in UP, right? So these are the 2 major states which are comprising roughly 58% portfolio of the company. Then we have a third largest, like you can say, territory is Rajasthan, then Jharkhand, and then Punjab. So these are our biggest territories in terms of the number of customers or the portfolio size.
And how many offices would you have pan India?
So sir, right now we guys have roughly near about 500 branches.
500
500 branches along with 19 regional offices.
19 regional offices. And what would be your total, employee strength in the company?
Sir, it's now more than 4,700 employees, and we have only on-roll employees with us. There are no off-roll employees. Even our peons, staff, like serving staff, all the guys are on-roll. So we are giving them the benefits of Provident Fund, ESI, even medical insurance. All these benefits which are given to a particular employee is being given to the sub-staff as well.
Got it. Now that we have understood, the overall business model, the customer segment, right, and a few achievements, it's now important to get into the financials of the company. So let's just try and understand that, about your AUM. I was reading the report in depth, and what I observed was a very steady rise in your AUM, currently being at 2.5 thousand crores as your current AUM, right? One question that immediately comes to the mind is, you must be doing something very right. What are those strategic, levers which has enabled you to scale up so rapidly to this 2.5k, crore AUM currently, right? What are those things? Top, say, 2 or 3 such key levers in your business.
I think, sir, firstly, it's promoters' vision that they want to expand. One. Second, the infrastructure that we created over the period of time in terms of investment in the employees, middle level, top level employees. And the third is the right environment, I must say. See, doing disbursement is not a very difficult task, but I think getting the collections is a very important task, right? So with these 3 major things, we have been able to maintain, or we can say sustain our portfolio quality. So promoters' vision is very much important. Second, right environment, and the investments that you are doing into your employees. If you are doing all these 3 things now, I think sky is the limit, right? So that are the major reasons behind this growth, and we guys are very much clear that if we are doing a steady business, rightful business with proper policies, procedures, risk metrics, I think things can be achieved with the same portfolio quality.
Got it. So, that immediately opens up the next set of questions for me very naturally. Let me now ask, right, around this overall, demand and supply side, the specific numbers, right? So let's start from the very basics. Once again, small questions, right, which I'll ask, please share in your inputs, and then we can tie all that together to understand the overall economics of the business, right? So first question is, what are the various modes through which you're raising capital, and what is the average cost of your capital?
See, sir, if I divide my capital into 2 parts, equity and debt, right? So debt is like having a percentage of 80% of my total capital employed. So roughly 20% is my equity, or 25% is my equity, and rest is my debt. Now, if you tell about debt, so down in debt also we are raising money by taking the term loans from banks, including public sector bank, private sector bank. Then we are also taking term loans from the financial institutions, like bulk lenders, like bigger institutions, bigger NBFCs. Then we are also raising money through external commercial borrowings. We are also raising money by issuing the non-convertible debentures, right, to the foreign entities, to the financial institutions, to the retail investors. These are methods of raising debt from the different channels, right?
Right.
Then if you talk about the equity, there are three major investors into the company right now. One, ICICI Bank, I have already taken his name.
Yeah.
Then there is a Kitara Capital. It's a Oman-based fund. They have invested into the company since 2016, and they are with us since then particularly. And the third major investor is the promoters itself. So we have a good chunk of, you can say, 56% of our total equity is being with the existing promoters and promoter group shareholders who are putting money again and again into the company as per the requirements of the company. So these are the major source of, you can say, capital with whom the guys are raising money.
Got it. And what is the average rate at which?
Sorry, I missed that thing. So average cost of borrowing right now is near about 12.4%.
12.4%. Understood. Now let's move on to understand that, okay, you have raised the capital across multiple of these lines. One quick question over here. Are you also into this co-lending model, which all other NBFCs that we have spoken till date have said, except for one very large NBFC who is flush with capital, hence said we don't need co-lending. But how about you? Are you using co-lending facility from RBI?
See, sir, co-lending, every bank is talking about co-lending, but co-lending right now is not a very successful model right now because right infrastructure is not present. So right now we guys are more into BC, business correspondent model, where we have tied up with the ICICI Bank, Small Industrial Development Bank of India. We are about to have a tie-up with Hinduja Leyland Finance, IDFC Bank, Federal Bank, where we guys are doing this BC model, right? Because this co-lending model is very difficult. There are challenges in terms of reconciliations, segregation of the amount for the repayment, from the area collection, all these things. So right now we are not into the co-lending model.
Understood. Now this capital you would now deploy in the market via the JLG model. At what average rate would you be lending over here?
So right now we guys are charging an interest rate ranging from 25.1% to 25.5%.
Understood.
Yeah.
Understood. So with this, I understand that you are a strongly profitable entity. So can you share with our viewers what has been the revenue in the past 2 financial years, FY23 and FY24, and what has been the profit after tax across these 2 years? So we will know how the business has been growing.
So last financial year, sir, FY24, we have crossed the total income of more than 500 crores. So the total income was near about 540 odd crores. With the profitability, PAT, profit after tax, was 72 crore.
Okay.
Last year, that is FY23, the total income was near about 300 roughly odd crores, where the total profitability was near about 46 crore PAT, profit after tax. So these are the figures for the last 2 previous financial years.
So that's like 90% jump year on year on the profitability itself. Wonderful.
Yeah.
Okay. That's good to know. Now, how are you looking at, increasing your profitability, increasing your base, increasing your AUM going ahead?
See, sir, we want to now expand into the south part of this country because right now we have almost a central part, northern part of the country, and we are not present in Karnataka, Tamil Nadu, Goa, or you can say Kerala. So right now the intent of the company to touch Tamil Nadu, Karnataka and Goa and some parts of Maharashtra as well. So to expand gross AUM. Then there are some untouched territories which are in our existing states as well, like in Bihar, UP, Gujarat, MP. So there are certain areas where we are not present, where we want to expand ourselves also. And in terms of the profitability, or you can say the gross income also, we want to now touch a total income of near about 800 crore by the end of this financial year, which is FY25, and to touch the total profitability near about 120 odd crores. So that's the target for this financial year.
Got it. Okay. So you're basically getting into greater number of pin codes beyond what you're present in the existing states, and you're also looking to enter into new states, for further expansion. Got it. Now, the next question that would naturally come over here is, in your reports, it has been highlighted about the importance of maintaining a strong capital structure, capital adequacy structure. For our viewers, can you explain from a layman's perspective, what does capital adequacy mean and how is it important for an NBFC like you?
See, sir, capital adequacy is basically the adequate level of capital which is required to sustain your business, right? RBI has defined that if you are having 100 rupees debt, then you must have 15 rupees of equity with you. That means the total capital is say 100 rupees, then 85 rupees should be debt and 15 rupees should be equity.
You're right.
That is the total structure, right? One. Second, as a company, we want that we should have at least 1 rupees equity against 4 rupees debt, so that at any point of time our leverage ratio should not be more than 4:1, right?
Got it. RBI permits it to be in the range of 8 to 9.
Yeah, RBI they are more towards the capital adequacy ratio, which should not be less than 15%. But as an entity, we want that it should be near about 25% to have that additional buffer in case of any sort of exigency or any sort of problems which can come in near future, right?
Got it. And just like COVID
situation or all these things, right? And I believe that if a management will have the additional buffers, that thing will help them to sustain any sort of future disturbances, right? So to have that good business, a particular entity should have at least 4.5 or 4 times of leverage in the balance sheet at any point of time.
Got it. Yeah. So, for our viewers, as you understood, capital adequacy essentially means what's the kind of debt to equity ratio that you should be having in the company, right? As per RBI, you should have at least 15% of your capital, which should be in equity, and the remaining can be in debt. The more the amount of equity percentage which is there, it means you have greater cushion in case of any exigencies, right? So, and the philosophy of MML is to have way beyond 15. They are currently at 25%, which is a very healthy capital adequacy ratio which is being maintained by the company. Now, coming to the fundraising, you mentioned that you have you raise capital through non-convertible debentures also, right?
Yes.
So,
Yes.
What are the rates of these non-convertible debentures and what are the ratings? If you could share some perspective on that.
So, sir, right now, we guys have raised more than 200 crores to non-convertible debentures, where the range is started from 9% till 13%, because the interest rate is being dependent upon the multiple factors in terms of the tenure, in terms of the security, all these things, right? So right now we have raised more than 200 crores, ranging from 9% to 13%, and from secured to unsecured, and that too to retail, institutional investors, and to the foreign investors as well.
So retail can also participate in this.
Yeah.
Perfect. Okay. Now moving on, let's now understand a little bit about your usage of technology. You mentioned very clearly that at the early onset of a discussion that your whole journey is paperless, right? Which is great for any NBFC which is scaling. Without technology in today's world, it's impossible to scale, right? And scale at a fast pace without making errors, right? So how are you using technology? You mentioned something about on the customer onboarding part, but how about other details around payment collections and internal processes, or maybe customer outreach, all of that, right? How are you effectively using technology to be able to scale up your business?
So basically, sir, see, I mentioned in the very beginning that we guys are using one mobile application which is having all the features to map the collections that we are doing into the field, right? So all the collections that are being happening into the field is being mapped through that loan application, right? which is we called as FinPage application, where all the entries are being punched.
FinPage.
Yeah, FinPage.
Got it.
Then we guys have also given an option to our customers to make that payment through online mode, like QR code based payments, Bharat Bill payment system, NEFTs, RTGSs, and other options as well, right? Then we have multiple applications to map the traveling of our employees as well. We are using one application which is being used to track the movement of our employees into the field, right? Then we have another application to manage our areas as well, which we guys right now owned that application, which we called as Midfin collection app. Then we are about to start one client service app as well, where the clients can see their outstanding, their last repayments, all these things, right? So all the applications which we are using are being used to monitor the quality of the portfolio, to monitor the quality of our efficiency, to monitor the delivery, right? So these things are being managed by these different applications right now, which we are using.
Got it. It's a very clean, and business directed technology stack which you have. Got it. Okay. I'll move on to the important piece, which I think, haunts every financial entity, and that is not haunts. I mean, it's good to have, regulatory surveillance and regulatory, ambit around operating, right? So how has been, your overall business processes around maintaining, regulations and compliance, right? How are you coping up over there?
Yes, sir. You itself said one thing, that bank like ICICI Bank invested into the company, and then I think there might have been multiple, you can say, the surveillance due diligences which might have been happened with the company. So these are one of the reasons why a bank like ICICI Bank invested into the company, because we believe in corporate governance, right? So we guys try to fulfill all the compliances, whether it's direct tax, indirect tax, Companies Act, SEBI, BSE, RBI, labor code, labor laws, all of these things, right? So touchwood, from the last, I think now 13 years, we have not faced even a single non-compliance from any of the department, right? Whether it's income tax, GST, all these departments, right? So the management is very much clear that we want to do business, but clean. We don't want to do any business where there are non-compliances. Directors are like with us on this part, that if the particular compliances is being happening, then we should do business, right? So on compliances part, we guys are very stringent. We believe in compliances. We fulfill all these compliances. Even we very recently had our RBI inspection as well. We tried to give explanations, tried to give all the information that RBI has taken from the company, and so that's the motto. Corporate governance.
Got it. And how big is your regulations and compliance team in the company?
So we have a team of now 7 persons who are into the compliances. 7 persons who are into the compliances only. We have a chief compliance officer as well. We have a company secretary, separate company secretary. We have a legal girl as well. Then we have 3 to 4 persons separately sitting on the RBI compliances, because right now RBI is asking data on day-by-day basis. So good number of team members.
Got it. Cool. Now moving on to another very important facet. Definitely everybody would be very appreciative about the fact that not only is it a business problem that you're solving, it also has got a lot of social angle to it, right? So it's actually doing good for the society, at the same time running a profitable company. Nothing better than that, right? Now, one point which you have very adequately touched upon is the women empowerment, right? 4 or 5 women, non-relatives, right, forming that consortium, raising that capital to run those small businesses, right, serves a very pertinent problem in the society. We would also want to understand, beyond this, are there certain other measures also on the environmental and social and government's initiatives? We call it as the ESG initiatives, which are in line with the vision and mission of the company.
Yes, sir. Very recently, in March 24 itself only, we have hired one of the top 4 firms, right, to done the ESG survey in the company, right? where the motto of now the entity is to do the ESG compliances as well, right? For that also, we guys are giving loans even also to the customers for procuring the ESG compliant items like solar items, all these things. To take an further initiative, we have now like transferred all our inverters or batteries into the solar panels into all our branches. So now all our branches are taking the electricity through these solar panels only, right? Now third, we guys are also the beneficiaries of this microcredits, carbon microcredits, right? Where we guys are consuming those micro credits also, and which we're gonna tell you that how we are like saving these carbon credits, right? So the intent. Sorry.
One question over here. I'll just pause you. Just for my understanding and for the understanding of our viewers, you mentioned this term, urban microcredit. Can you just explain what this means?
So basically, there is a UN-based agenda that the entities who are consuming or who are generating more carbon into the environment, they need to pay something to the other nations who are saving those carbon footprints, right? So we as an entity are saving carbon footprints into the environment by like giving loans for procuring solar power panels, by also introducing the solar panels, by taking the chulhas, electric chulhas also, and the LPG chulhas also, right? Rather than burning the like woods, right? So all these things help you to generate those carbon credits. That carbon credits help you to earn money as well from those nations through UN. So these things we are also doing. And as an entity, we are also like into the social and governance part as well. Environment also, as well as social and governance part as well, where we guys are now giving some loans for specific social empowerment. Like for we guys are also trying to give loans for like particular education, social means, all these things as well.
Understood. But that point was very interesting, which you mentioned about that environmental impact directly through your business, as well as, in your whole, running the operations in the company itself, exchanging all inverters for solar panels, and then, funding, buying the solar panels to people who are taking loans from you. And with that, we learn about this new concept of urban microcredit, which essentially is whatever carbon emission we are not doing, that is a saving, if I have understood it correctly, that gets converted into monetary terms. That is something which we are saving for the country, right? Which otherwise we would have to pay to the other economies which are either carbon neutral or carbon positive, right? In the positive. Got it. All right. So fair understanding around your ESG philosophy. Moving on to the last question. How does the future look for MML? How are you looking at, what are the big areas, audacious goals that you're going to chase to scale up from 2.5k crores to say 5k crores?
See, sir, now the next step is to get ourselves listed on the BSE. Our equity should be listed on the BSE. So the next goal of the MML is to do that listing within the next 2 financial years. One, to touch the portfolio more than 7,000 crore. Third, to touch at least 18 to 20 states, which are right now 12 states, and to cross the milestone of 2 million customers. So these are the coming milestones which we guys are planning to complete in the next 2 to 3 financial years.
Excellent. Great. I think, Gopesh, I've come to the end of my questions, all that I wanted to know, and I'm sure our viewers would have also got a very clear understanding about your business, the overall business operating model. I'll just, recapitulate the entire learnings that we got, and please feel free to correct me if I'm going wrong anywhere. So, Midland Microfinance Limited is a microfinance NBFC company that lends to consortium of women who are running small enterprises, right? They are termed as a progressive poor. This whole market segment is of a staggering size of $200 billion, right? Now, this is highly underserved, right? Wherein actually players like MML are solving a very pertinent cause, and not only a cause, it's a very strong business problem to solve, right? MML was founded in 2011 in Punjab, but right now they are spread across multiple states in the country. In fact, right now, the first concentration of the borrowers is in Bihar, followed by Uttar Pradesh. The total number of users that MML has is over 10 lakh, right? MML has got investors on its board that include the likes of ICICI Bank, Kitara Capital, and the promoters also have infused that capital. The total AUM of the company is 2,500 crores as we speak of, right? In the next 2 to 3 financial years, MML is aiming to achieve 7,000 crores in AUM, getting listed on the exchange, right? And spanning across 18 to 20 states. Coming to the financials of the company, excellent financials. FY24, it was 540 crores with a profit of 79 crores. And the year prior to that, 72 crores, right? And in FY23, it was 300 plus crores in revenue with a PAT of around 47 crores. So that's roughly around 90% jump that you're seeing. Heavily, capital adequacy maintained company at a very good capital adequacy ratio of 25%, has got a very good perspective towards ESG, which is so important, right? Especially for companies in our age, which is environmental, social, and governance initiatives. The company takes regulations and compliance very seriously, right? And has been passing all the tests of RBI and other regulators that they come under, primarily RBI, so the past 13 years, right? So onward and upward journey, wishing that to you, Gopesh, and to your company, MML. It was a lovely discussion that we had, and I'm sure our viewers would also learn a lot from you. Thank you for sparing your time and sharing these wonderful details.
Thank you, sir. Thank you, Vijayji, for giving us this opportunity, or giving me this opportunity to tell about our company. And I wish all the words that you have mentioned about the company, we should achieve all these things. And thank you for inviting me for this discussion. Really thanks. And thanks to your viewers as well.
Thanks.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.